with that kind of research and data, we wouldn't be here. Yep. It wouldn't even be like, hey, see, what happens is people are motivated for certain things. They have incentives, growing the stock. But if you have incentives and there's rules, just like you play volleyball and, you serve it and you get the ball back over, and there's rules or structure. Yeah. And if there's rules and structure around this, I think it cleans it up a lot. Yeah. I mean, it's really too bad that there weren't rules and structures, because if there were rules and structures, I don't think you had this blowout.
Proof of Work crew, Scotty Braun, Anthony Varell battling through New York City traffic as usual. Jason Raznick is the CEO of Benzinga, running a massive conference right now at Chelsea Piers and joining us just for a little break from the session. We're glad that we were able to pluck you away from that just for a quick 15-20 minutes. How's everything going? And thanks for joining us, man.
No, thanks for having me on. It's nice to be able to sit down for a few minutes. The conference is going great. Kicked off this morning with Kevin O'Leary, Anthony Scaramucci, and Genevieve talking about FTX, etc. It's a very interesting thing to kick off the event that way.
So, I mean, we've known each other for a while, back in the cannabis days. I mean, I've obviously seen Benzinga grow into the powerhouse that it is. We've also seen that industry go from nascent to institutional. Do you see that same paradigm shift happening in crypto down the road?
Yeah, what's interesting is when we got in the cannabis space, it was probably 2012, 2013. There were a lot of companies that just added the word cannabis to their name, and they weren't legit. And so one of our jobs was try to figure out who was real, who was not. We'd have a conference, and we didn't want to put like a company that was fake on, so we tried to filter it out. That's what Benzinga's place is like. We try to report and let people decide, but we also wanted to see who was real, who was not real, And so in the crypto space, crypto's going through an interesting time. It was a lot of straight up, the market's going up, a few times going down, but the last 3 months have been very bad in crypto. Very bad, which to me is a resetting a little bit. Yep. And I don't think crypto is going away. So to your question, just like how cannabis was, like no one looked at it and now everyone looks at it, I think crypto is here to stay because it solves problems. Yep. But I think people, including myself, were attracted to high interest returns, yep, etc. And we didn't necessarily evaluate the downside risk. And not just me, the biggest investors in the world, but also the companies, because multiple companies have gone bankrupt in the last 4 months.
Yeah. What are you investing in the sector? So Bitcoin guy, ETH guy, spread it around.
Well, so here's how I got in a bit. I was buying Bitcoin and ETH, but I did a lot of USDC. So this is Circle's product, where United States stablecoin, 1-for-1, it's supposed to be backed. However, it depends the brokerage that you're using, because they can leverage up the USDC. So I didn't realize that fully. So I had money at Voyager, where I had a lot of USDC and a couple other coins at the VGX, whatever. And Voyager went bankrupt. Yep. I serve on the Voyager UCC, which is the credit committee. It's 7 people. So there's the debtor controls the process, the creditor, the UCC, we help make decisions. And I'm on that committee because I had, used some Bitcoin, but mostly USDC and VGX. Long term, I mean, ETH seems like it has a lot more utility, but at the end of the day, like Bitcoin, people can put value on whatever they want. Like you got sports cards, right? Sports cards are, they have value on them, and it's subjective, right? I mean, Yeezys had a lot of value on it, and then Kanye West was up. So it's hard what people are going to put value on. I mean, people say Bitcoin's going to be at $250,000 in 3 years, right? And that only time will tell. Yeah. If you knew today that Bitcoin's going to be at $250,000 in 2 or 3 years,
putting every dollar I have in it.
100%.
Yeah.
And what about your thoughts on just generically the Web3 space and the projects that are going down there? Like to bring it big picture, I mean, look, and Anthony can help me list some of the companies in the past year that are really diving into the space. I mean, you brought up sneaks, so Nike, Swoosh.
Yeah, I mean, you've got Nike, you've got Starbucks. They're all gravitating towards Polygon. I mean, I think you're going to see a lot of consumer loyalty ecosystems gravitate over to the blockchain with tokenized loyalty cards. I mean, NFTs are a great use case for that, and they're uniquely identifiable, and it's immutable.
Yeah, and so 100%. And what we find is there's a lot of people trying to get in the loyalty space, right? I mean, that's VGX, which was a Voyager coin, was part of the loyalty space. Like, look at the Delta miles, and then use virtual coins or Starbucks, like what you're talking about. I mean, a company based on Michigan, StockX. You know, people trade shoes, but now they're like trying to do digital storage, and that's where the NFT space can grow. The only thing with NFTs is, again, it's the cream rises to the top, because there's there's people can start an NFT tomorrow. The barriers to entry aren't
Zero.
high. Exactly.
Zero.
Yeah, zero. So how do you anoint the winner right now? How do you figure that out? That's
Yeah, I mean, I think there's a lot to be said there. There's a lot to unpack there. We could probably have a whole episode just on just on that. I mean, luckily enough, the first NFT I bought was a Bored Ape. I've got to see this ecosystem really evolve, but I didn't hold. I have my investment criteria, my thesis. I buy the assets, I sell the assets. I get in, get out, and I've watched the entire thing grow. I mean, I believe that a lot of the NFTs were tulips. I mean, I don't think you're going to see $500,000-$600,000 JPEGs moving forward, but I do think that we're going to transition to using that underpinning technology, the smart contract, blockchain, for real world use cases, tokenizing physical assets, loyalty. But as far as like a king of the NFT space, I would have to say that it's Bored Apes and CryptoPunks, only because the CryptoPunks are the most relevant. They've been around forever, and that really is like a relic per se. And then the Bored Apes have got the most investment dollars. They've got the biggest ecosystem. They've got the most sophisticated holders. They happen to be in pole position right now.
Got it.
I think that could change at the drop of a hat, though. I mean, I think everything changes by the week.
And so, like, for NFTs, when I see utility, so we have an award show. So at Benzinga, we do an award show tomorrow night for FinTech, and I wanted certain music, but we don't have the licenses to these songs. And then if you go on YouTube, it gets kicked off, I guess. And so I would love to see NFT utilities where you can not have to go through like a broker, or you not have to go through, one of the big agents, but where I can pay 9 cents based on we're going to have 10,000, whatever it is.
Those are coming out.
And that to me solves problems. And in terms of blockchain as well, when you do wires and you send money, it makes it so much easier. So like, I believed in the USDC, like, hey, we're not just the bank, we're disrupting it. You'll have less fees, you can get more interest, but then you have these companies who are public or not public, and they have investors and they need a return. They started leveraging our money. They started lending it out, and it's put a bad taste in your mouth for crypto companies right now.
Yeah, I mean, what really got me super interested in crypto was back in the cannabis days. I mean, sending 250,000 to Canada from a U.S. financial institution, it's not only a pain in the ass. I have to go there, fill out everything, and it needs to be to the T. The money's in a vacuum for 36 hours. Don't know where it is, and meanwhile, I'm transferring large amounts of crypto instantly. It's
secure. Like they do double check. It's not like, I know people lose stuff and lose money, but like transferring crypto, I've done wires. It's like
I've screwed up way more wires than I have a crypto transaction.
Yeah, and on the weekend you can do it, and there's not one big monopoly saying, hey, you can't do this. And that's why I like the power of it. But what happens is, just like in cannabis, in our early years when Benzinga started covering it, some companies do aggressive things and they want to hit numbers. I mean, listen, any company wants to hit numbers, right? They have investors themselves want to hit numbers, and sometimes you go too aggressive, and that's where I think why we are here today. And so what shakes out the next 3 to 6 months? Is it Binance? Who leads this? Who's the safest? I mean, yes, I'm surprised, given where FTX is. When FTX saw this stuff happening in the last 8 months, you would think it would do everything it could for risk management versus upside management. So forget the return, just plan for risk.
It's like they thought the money was never going to run out. They would be able to go find a couple billion to patch it up here and shift the risk.
And then you're talking pyramid, and that's Ponzi. And that's what people say. That's the downside of crypto. People say Bitcoin. Why would I buy Bitcoin? Am I going to get a dividend?
Why are you going to buy gold?
So there you go.
It's store value. It's price appreciation. It's a way to take cash out of the system and allocate it.
Well, their argument would be, say you have a gold brick.
I mean, but technically, that Bitcoin being on my cold storage wallet is the same thing.
It's true.
Like I do not your keys, not your crypto. All of my coins, whether it's ETH, Bitcoin, Matic, I keep them off chain in a cold storage wallet. I don't keep them on centralized exchanges. That's just as tangible as the gold I have in my safety deposit box.
Yeah, and the gold is just someone ascribing value to it. It's
Yeah.
not. It's not like the cost to make. You know, you see a bracelet. You know, the card. It's just someone ascribing value to it. It's brand. It's the same thing. I mean, you think about these brands. Whatever, Gucci and all this stuff. It's someone ascribing value to that brand.
Yep.
Bitcoin could get there where people ascribe value, like, hey, I have 10 Bitcoins. You know,
Yeah.
it's.
I mean, I think Bitcoin truly is a store of value. I mean,
Yeah.
I think it truly is a store of value. I mean, a lot of people knock it because of the transaction speed. You can't really use it as a currency. This stuff isn't a currency. It's a technology. I mean, Bitcoin, I do think, is not going anywhere ever. And with anything with FTX, it's proven the thesis that decentralized stores of value are relatively safe and they work.
Got it. Yeah, I hear you. I mean, that's. Yep.
We're also talking about rotten eggs at times, which exist in every industry. You know, we chatted with Mr. Wonderful quite a bit about just cleaning things up. I mean, that's part of any industry that's new, right? You're going to have people jump in, get aggressive, and take advantage. And also, a lot of this has to do eventually with what laws and regulation are in place. And most of that hasn't played out yet. What have you observed from a legal perspective, and what do you hope happens in terms of how this space gets regulated?
I mean, people didn't want regulation, and they just didn't want regulation. And you see, not having regulation, I think the downsides overweigh the positive not having regulation, because the proof of reserves and look at the liabilities, we wouldn't be here. Like JP Morgan just can't go do certain things because there's the banking law. I invest in community banks through this one guy, Tim Melvin, who's on our site. I'm not looking to promote, but they put a banking law in it for 1996 or something, where he can actually look at the analysis, and it's very detailed because they have to. That was regulation. Yep. This was the banking law that changed. I don't know what year it was. It probably wasn't 96. It was probably later. But it changed how these banks function, how you can do the research. With that kind of research and data, we wouldn't be here. Yep. It wouldn't even be like, hey, I'm going to go. See, what happens is people are motivated for certain things. They have incentives, growing the stock. But if you have incentives and there's rules, just like you play volleyball and you serve it and you get the ball back over, and there's rules or structure. Yeah. And if there's rules and structure around this, I think it cleans it up a lot. Yeah. I mean, it's really too bad that there weren't rules and structures, because if there were rules and structures, I don't think you had this blowout. I mean, I don't think you also have this high interest rate returns and some of these things, but I also think you have a more steady, because you guys, where we're at today. I
mean, that's where cutting your teeth in traditional markets works. You understand that if it's too good to be true, it is too good to be true. Yeah. Like seeing 1,000% APY or seeing an 80% APY on a token looks outrageous. Yep. And I mean, that's just where I think we all. I know, and so then, on some of these coins are paying that, and so people lost their money. So okay, they were dumb and they deserved it. I mean, some of these other ones were paying 8%, and when I talked to the guy who's in charge of USDC, he's like, well, because we're able to lend it out, but we're also not lend up, but credit cards charge 29%, so we're breaking up the bank thing. I believe that concept, but the problem is they lend it out more than once, and we don't know that. And then we have the same problems in the TradFi system. We're literally back to the old default swap, excessive leverage.
Yeah, and so we don't, and the consumer, the average person doesn't know it. Doesn't know it. When I invested in my USDC through Voyager, I thought I was investing basically in JP Morgan. Yeah. I didn't think I was. I'm not referring to Bitcoin. Bitcoin can go up and down. I have some Bitcoin, but when I'm referring to USDC, one for one, I got some more interest. I thought it's because they're disrupting the banks. No. So the worst is and this is where I feel for people so much, including myself, the worst is when you invest in something, yes, and when you invest in a stock and go up and down, but the worst when you invest in something that you think you know what you're investing in, and it's completely different. And on top of that is I being on this Voyager credit committee, I talked to families. This one person is a chef and his wife's a waitress. They have Solano and they in Voyager, and they had a lot of their assets in Voyager. I'm gonna say 80% of their assets, and they didn't. It's if I own Tesla through a brokerage, online equity brokerage. If the brokerage goes bankrupt, I still own my Tesla shares. Yeah. In crypto, you don't, and that's
a big problem.
That's a big problem. SIPC insurance doesn't apply in crypto. 95% of people don't know that, and so that's where this is so upsetting for a lot of people, and that's why the committee,
Yeah, I mean, one of my main hopes is that we get some sort of regulation and Coinbase gets to go under a broker-dealer and operate like an actual financial institution or exchange, because that'll give people not only FDIC insurance, but it'll give people confidence that they can hold their coins on the exchange and they're not going to get rugged.
Yeah, and that's where's Gary Gensler? Where's like?
I'm afraid of Gensler, though.
Yeah.
I think it should be CFTC chairman that's running
CFTC
the show.
chairman was supposed to speak.
He spoke about a week and a half. Is he speaking again?
No, he was supposed to be at our event in that first panel today.
Okay.
And they canceled out like when the FTX
He
stuff.
understands the ecosystem and he understands the consumer. He also understands the entrepreneur that's actually active in the sector. He said everything right in his testimony about a week and a half ago. Basically, the genie's out of the bottle. We're never going to be able to regulate this out of existence. It's always going to exist, whether it's foreign or domestic. We need to put the guardrails in place that are going to allow people to be protected as well as transact with confidence and let it do its thing. If it succeeds, if it dies, we're agnostic. But we need to make sure that there are clear-cut and concise rules, regulations, and that the consumer's protected.
And then when there's rules, in banking, there's rules. How does, I guess they have to report every quarter. We need to know. I mean, for crypto, you need to, if the rules are broken, that needs to be known. I mean, there's no, it's like this shouldn't have happened, what's happening.
No, I mean, the thing with crypto as well is we all say we're for decentralization, we're for transparency. Crypto exchanges should have public wallets. Like Binance has a public wallet that has $8 billion in Ethereum reserves.
But how do you know? But what do you know about Binance's liabilities then?
I mean, correct. I mean, it obviously, in a vacuum, it sounds great. I mean, there needs to be other controls put in place.
That was something that was brought to my attention this week.
Their assets, but the liabilities.
And I didn't, so that was something that's brought. Yeah, so that's my take.
Let me take you to the younger generation. What's Benzinga's take on what's clicking with, forget millennials, Gen Z, social media trends, and also even touching on financial literacy for the next generation, because they're observing all of this too, and especially some that are pre-investment stage, but they're observing everything going on, and ultimately that's the future here. And you've got more video game usage, you've got a lot of interest in NFTs and or as Anthony and I like to call them, digital collectibles. So what are you guys observing from ages, whatever you want to call it, 10 to 20?
So 10 to 20, like the young, they'll play games on their apps and play games on their phones, and they'll spend money to get digital goods. Mm-hmm. They'll spend money for sure, digital goods. They want to have more coins. They want streaks. It's a whole game there. But when it comes to on Benzinga and financial literacy and information and investing, trading, what I see a lot in that case is exploratory. The younger generation, I find, trying to explore, finding these new things. Our crypto event, it probably came about because younger people at Benzinga is we have to do a crypto event. I'm very into it. So they're trying to find the next great thing or what's going to change, what's going to be the future of the world. What I try to stress is don't go for the get rich quick scheme because it usually doesn't work. But it's finding what's going to be foundational. What's foundational? A line that I don't know if I coined it, but now the CEO of the guy who owns Venetian, all the real estate under, I say the thing behind the thing. He mentioned me in this conference call because I said that, and he's the real estate behind the thing. So they're a REIT, they buy the real estate underneath. But the thing behind the thing. So what's the foundational thing for crypto and blockchain? That's what I think about. So young people sometimes go to the end result, the end product, but what's the thing that's foundational? Is it Ether? Is it Polygon? It's what's that foundational item? And then to try to truly understand that. Warren Buffett talks about your circle of competence and your circle, it's another thing is tokenized real estate. So we have a lot of tokenized real estate companies, and they're doing mortgages or they're tokenizing mortgages or tokenizing the real estate. So there's a guy who has 600 houses he buys every month, and it's all tokenized. Mm-hmm. And his argument is there's real assets behind it.
Yeah, I think the tokenized real estate argument is a very valid one. The only thing that I always get tripped up on is the legacy systems actually being able to take custody and transact in a Web3 nature. Because when I bought my house in Fort Lauderdale to set up my utilities, to get everything in line, I was sending faxes to the municipality.
Yeah, and so how does title insurance work?
But I truly believe that your license, your driver's license, the deed to your house, the title for your car, your insurance policy, all of those can be and should be tokenized.
Yeah.
It's creating provenance, it's creating an immutable record of ownership, and it's also, you're actually owning those assets.
What about a DAO for like people that want like home equity loans or mortgages?
So I've thought about that. DAOs, I think, are very interesting. I've yet to see one that actually performs at scale from a governance perspective and a value creation perspective. And I mean, they look good in a vacuum. I almost think they're too like kumbaya-ish. I think the idea is great. I think the execution so far, no one's really got it right in a DAO.
I had a friend that was in charge or started the DAO for the Constitution.
Okay.
I think he's going to be here actually today. And then, what's his name bought it? Ken Griffin.
Yep.
Yeah.
But I think the tokenization of physical assets is where we're going, especially with Web3 and NFTs. Yeah.
But even like real estate, then you're going?
Yeah.
So did you think the title and all that will catch up?
I think yes, and the actual assets themselves, absolutely. So, for instance, we're working on a tokenization of investable, of alternative assets, diamonds, gold, wine, sports cards. We vault them in a centralized authority, we authenticate and tokenize, and then I can trade that with someone in Beijing. I can trade that with someone in Dubai. There's instant settlement, there's an immutable record of ownership.
Someone has to trust that you have it, though.
Yes. Yeah. Well, okay, so via Chainlink, we can actually create a self-auditing mechanism in the vaults. And then, for instance, with the card business, we're having someone like PwC or Deloitte come in and audit the vaults on a quarterly basis, sign off on an opinion, and keep that as public record to maintain the trust in the system.
Got it. Okay.
I think a key word here, I mean, we've said it once or twice though, is there's a lot of friction in our world, and this is software, or these are solutions that can help get rid of some of that friction too, right? So that's something that you're buying into. I mean, that's, for me as an investor, someone on the outside, and also someone dealing with some of this friction, like I'm in sports and I see the collectible industry as, first of all, it's been around for a long time, and I think it's only going to continue to improve, but there is a ton of friction that's been there forever.
Yeah.
And these are ways that I think can fix it.
Yeah, and I mean, a lot of the time when it clicks, especially talking to investment professionals, is you basically compare Ethereum to an HTTPS protocol online. You don't know what it does.
It's true.
You couldn't tell me what it does from a code perspective. However, it is running everything in the background.
No, it's true. I mean, back in the day, I owned one of the first online textbook sites, College Book Zone, and people would say, Jason, this is 98. People would say, it's not going to be successful because people won't put their credit card online, right? And that's a distributed world, like where you had to go to all, in Ann Arbor, you had to go to a certain bookstore.
Yeah.
And then it would create a textbook store, and it get distributed to more places, and, and that's what crypto allows. I mean, people always talk about crypto is the internet in 1996, you know?
Well, I'm glad to be a pioneer on the internet in 1996. I was unfortunately, I was too young to experience the .com, which, I mean, I wish I could experience.
There's positives and negatives. I mean, I lost money in the stock market on sale, all these different ones, rare, medium, but so that I have it on my phone just to remind me. I had Amazon shares. I think I had 300 or so. And long story short, I sold it at $10 a share. Amazon, okay, is the only stock that had value of these stocks I bought. Sold at $10 a share, and the commission per share was $2, so 20%. And so that I sold it for $2,100. That $2,100 would be worth like $1.6 million today.
Jeez.
You know, like, so if I would have just, if I didn't sell anything, I sold Amazon. That was the one that could pay my margin.
Yeah.
Like I didn't understand like margin stuff back then, but the stocks kept going up. I'm like, oh, okay, you got to keep buying. And that is the example right there of why leverage and margin's bad, because when it goes against you, like with FTT and all that stuff happened with FTX, it compounds.
Yeah, I mean, I'll never forget 2010. I was living in the fraternity house on campus. One of the guys that never left us at FSU. Okay. One of the guys that was just out there walks into my room, and my partner and I were trading stocks, watching CNBC, doing whatever. He walks in my room, he goes, "Dude, Bitcoin, you should buy it." It was at no. It was at 0.09 cents.
Oh my God.
I go, "Adam, I have no idea what you're talking about. This is magic money, and I can't comprehend what it actually does."
Did Adam own it?
Adam sold it, I think, at $12, which any rational person would have done with that kind of return.
100%.
Well, Jason, really appreciate having you, and thanks for holding this conference too, and
Thank you,
bringing
sir.
some awesome guests.
Thank you guys for coming to the Benzinga Crypto Conference. We appreciate it. I think there's a long-term future in crypto. You just got to be careful and look at the risks involved, and one of the things like Mr. Wonderful's Kevin O'Leary, he's espoused to me is like diversify.
Yep.
Don't put too much. I at one point had a lot in tests, so diversify. Don't put all your eggs in one basket, no matter what. No matter what, like even if we said that Bitcoin was going to go to 200,000 in 2 years, like you never know what's going to happen tomorrow.
Mm-hmm.
Right. He's taken his discipline from TradFi and he rolls that instantly into crypto, and it works beautifully. It was a very interesting conversation with him.
Yeah, it's
Yeah,
great
no,
to
I
have
guess
him on
check it
board,
out.
and
Okay.
you too, into the space. So we
Well,
appreciate it.
thank you coming to the Benzinga conference. We appreciate it, and looking forward to watching this online.
Awesome.
Thank
Thank
you.
you for your time.